Hey guys, I'm kicking off a new video series today of interviewing different people in the markets, people who are successful, people who are self-directed, loving it, and doing well. So the first person I had the opportunity to interview and I'm bringing you today is actually my first stock mentor. His name is Micah Brooks. He's an awesome educator, awesome mentor, awesome teacher. And while he doesn't get credit as the first person to introduce me to the markets or investing, because that would have to go to Matt Justice, he is the first person to really make it real for me and break it down. And actually, the trading system that he and I developed together is the base of what I still do today. So he's an awesome person. So glad I had the opportunity to do this with him. And here's the interview. All right. Well, hey everybody. I'm bringing you one of the my favorite people in the whole world to talk about the markets with. His name is Micah Brooks, and I would just like Micah for you to introduce yourself to everybody out there, and to really just tell us kind of a little bit about your story, who you are, how you got involved in trading and investing, and kind of answer the question that some people might have as why would we want to listen to Micah Brooks about the markets?
Okay, so I got into this. I guess I'm going to gear this towards kind of age group there. Um, I was a college student at the University of Utah, and I was working at FedEx, and they had tuition reimbursement. By the way, it's always a good job option when you're a college student. FedEx, I think they still have that. But I worked early in the mornings before school, and some of the guys I worked with were working on their MBAs at the University of Utah, and one guy in particular was trading options and futures. And this was back in the late 90s. People were pretty gung-ho about the market. In fact, almost everybody you talked to at that time was investing in a stock, like a hot stock, some sort of networking or internet-based stock. And people were making some serious money. Of course, we know that came to a crashing halt back in 2000. But I kind of had the bug from that point. So I was talking to this guy. He was talking about the leverage and kind of the limited liability you could get from options trading. And it was like electricity in my brain. People have those, I guess everybody has those moments in life, but I was like, okay, this is what I want to do. And really it was motivated, I think it was motivated, number one, by greed. I wanted to make some money with very little. But also I just found it really interesting. So I started checking out books from the university library, the Marriott Library up at the University of Utah. And I started reading everything I could get my hands on options trading. And the books were tough. It's a tough way to learn. And I took a class at the U, Options, Swaps, and Futures. There's a textbook that everybody uses pretty much throughout the nation by John Hull, Hull. And it's the same title, Options, Swaps, and Futures. And it's nothing but a mathematical course. It's mathematics and partial differential equations, ODE, PDE stuff, pretty intense. And it really didn't teach me anything about trading. It taught me about how the models work. And the books, they would get me only so far as well. They would just kind of tell me, this is a bull call spread. This is a bear put spread. It didn't tell me when to get in, when to get out. It didn't tell me how to position size. And so over the years, I'm sure you'll ask me more about this, but I worked in a more formal way in the securities industry, made some money there, took that money, and just basically traded that accounts, I should say, plural, to what I have today. I also teach for Rich Dad Education, Elite Legacy. I also do some independent contracting, and that's gone well. Do some hard money lending here in the Salt Lake City area. I have some rental properties, and I have a newsletter service. And so I've done that on purpose. I want to be diversified. I don't want to be all in one place at one time. And it's gone well. I'm 41 years old now, married, 3 kids. Can't complain. Life is good. Cross my fingers, knock on wood. So that's a little bit about me. What else would you like to know?
Well, some you stated there, you said that you were more, you were involved in the securities business. So I'd like you to just elaborate, because I know your story, I know your background, but just for those people who don't really know you, meeting you for the first time, if you could just elaborate on that a little.
So when I was attending school, I ended up getting a degree in economics, a BS in economics in 1998 with a minor in statistics. And I had some upperclassmen, when I was my junior year, I met some guys that really were going to land some jobs. They had some job offers on Wall Street, which was pretty bizarre because the University of Utah is kind of a backwater school. A lot of people on the East Coast never even consider the University of Utah. But these guys had managed to get some job offers like from Solomon Smith Barney, Lehman Brothers. And so I kind of looked up to these guys and said, okay, how did you do it? How did you guys get a job? And they said, well, you have to get an internship your junior year. So you need that internship. And they said preferably on Wall Street. So my one buddy, his name's Adnan, he's a Pakistani guy. He had interned with Toronto Dominion Securities in New York City. But to get that internship, he had to personally fly himself out to New York City for about 3 or 4 months and hang out with the guys, the third-year analysts that made the hiring decisions. And I didn't have the resources or the time to do that. So I opted, it was actually kind of a funny story. I was delivering packages downtown Salt Lake City. That was my route. And I went to all these different banks, Zions Bancorp, First Security, Wells Fargo. There's a few brokerage firms like Wilson Davis, D.A. Davidson, among a lot of other ones, J.P. Morgan. And I started talking to these guys, pretty much like the receptionist at the front desk, and say, hey, do you guys take interns? And at D.A. Davidson, the lady that was working there, she goes, well, I don't know, but let me ask. And so she went back. She goes, yeah, sure. Does that mean you're going to work for free? I said, yeah, I just want the experience. And so they worked around my schedule because they allowed me to keep my job at FedEx during the summertime because I needed that money. But I would immediately go in at about 11:30, and I'd work for the rest of the day for them for free. And so that was my first taste of it. And I did that for a summer of 98. And then that kind of opened the door for later on. And again, I think the industry's changed definitely. The economy has changed. Mm-hmm. Late 90s, I know like for your generation, Jake, that's a long time ago. But things were incredibly dynamic at that time. I mean, it's like everybody had a lot of money. Everybody had a good job, it seemed like. And really like from a gold-weighted standpoint or an oil-weighted standpoint, the wealth in the United States, the middle class, I guess you could say, was the strongest it had ever been. Mm-hmm. And even compared to nowadays, it's decayed somewhat. So I easily got a job in Salt Lake City with Piper Jaffray. They had an office here. And I did that for a couple of years, and I got my securities licenses, Series 7 and 6.6. And you have to take an exam to do that. It's not too tough, though. And for 2 years, I did that and saved up some money, and then they laid me off in 2000, which was kind of the start of my personal. That's the last time I ever worked for a corporation, was 2000. So I've been self-employed ever since. So that's how I got into it. And I eventually just got rid of my securities licenses in 2006. I had started a couple of other companies, investment companies, where we managed money for people, and eventually pulled those accounts together and created an investment company. Really is just a nice way of saying hedge fund. I don't like to use the word hedge fund because there's kind of a negative connotation. Mm-hmm. And so I set up a couple of those, was bought out of the first one, made some good money on that. And then the second one, really we ended up fighting the state on a few minor details in the securities law. We had to kowtow to them because they're the state. And really, we just never got off the ground, and I shut that down in the summer of 2006, and that's the last time really I had a license. And other than that, just teaching a little bit and trading my own accounts. So awesome. That's when I say the securities industry, that means like working for a stockbroker. Like I was a stockbroker investment advisor.
Awesome.
And it is a good gig. If you can get in young, stick with it for a long time, you'll usually make some pretty good money.
Awesome. Well, thank you for kind of giving us a pretty good background about where you've been, what you've seen in the industry. I would like to just ask you, like, what do you see as some of the fundamental shifts that you've seen over the time, like over that time span? You know, like somebody new like myself, I'm just getting into this. Like, how is this going to be different for me than it was for you?
There's benefits and drawbacks. I think from an individual trading, investing standpoint, fees, commissions are much lower than they used to be, like in the late 90s. So I always tell people, you're learning this, you're doing this in the golden age of trading. And even fees on a lot of different mutual funds have dropped significantly because of the competition from ETFs. And so there's a lot of good things. Negatives, from a personal investing, personal trading standpoint, I can't really think of any negatives right now compared to how it used to be. Now, from a more formal, I'm going to get a job with an investment banking firm or some big broker dealer. Yeah, that's changed. I think it's a lot harder to do that. Every time I read the papers like Wall Street Journal, Barron's, who knows, they're always laying off people. Like they're trying to dial back their sales and trading operation to their corporate finance. The numbers of mergers and acquisitions have been dropping under the current administration. Democrats typically don't like larger corporations, so they really put a kibosh on a lot of these big mergers. Like, for example, AT&T and T-Mobile, they shot that down pretty quick. So there's, from a more formal standpoint, yes, it's tougher. Those jobs, I think, are gone, and I don't think they'll ever come back. Regulations have just changed. I mean, there's even talk now of going back to the Glass-Steagall Act, or try to separate investment banking from commercial banking. And I think that'd be a huge mistake. But that's, Bernie Sanders kind of kicked that off, and now Hillary Clinton's she hasn't really come out and said she'll do that. But Trump pretty much got that made part of the RNC, the Republican platform for this election. So we'll see what happens there. I don't think that'll happen, but there's talk of it. And I think that is kind of not the kiss of death, but it's just going to be really hard for younger people to get into the industry.
Interesting. So I kind of just want to elaborate on that because that's a very interesting topic. So why do you think it would be very detrimental to go back? I guess we are technically going back by reinstating that law, but I'm curious as to your viewpoint on what it would cause and why it would make it more difficult for us as younger people.
Well, maybe it wouldn't, but it's, I was having a conversation with a guy that lives in New York City, a friend of mine, and he doesn't work in the banking sector, but he works in the legal profession, which they deal with a lot of investment banking, commercial banking. And he brought up a good point. And this is why maybe going back to something like the Glass-Steagall Act would be a good thing. Maybe separating these banks, splitting them up. It seems like we know that interest rates have been falling, and central banks around the world are trying to pump money into circulation. But it's like trying to give a blood transfusion to a dead body. It's just not working too well. And part of that, my friend's opinion, and I kind of agree with this since I've thought about it the last couple of weeks, is that because we have commercial banking combined with investment banking now, that the velocity of money, kind of the circulation of money through the economy is somewhat stagnated. Banks can keep that money, invest it themselves, get more complex. They get involved with more complex transactions, and the money doesn't really leave the banks. It's not lent out as aggressively as it used to be. So the velocity of money slows down. And we have been seeing, if you go to the St. Louis Fed website, FRED, they have chart after chart on the velocity of money. They're the ones that track that. And it's really been dropping since the Glass-Steagall Act was scrapped back in the early 90s, mid-90s. And so there's some proof. Now, why would it be bad for the industry? Well, the banks that we currently have right now would be split up. And so there'd be some pain there. Like JP Morgan would have to choose, are you going to be a commercial bank or are you going to be an investment bank? And I think they have their Chase unit, which is all retail, business lending, commercial lending. And then they have JP Morgan, which is traditionally their investment banking side. But every large bank, money center bank, would have to do that. So like Citibank would have to split up, Bank of America, Wells Fargo. So some of these are a little bit more, it wouldn't hurt them as much, but other ones would be kind of damaging. So that's why I think it'd be kind of a rough spot for the industry. But I don't really care about those guys anymore. Yeah. I mean, it's not like I'm going to go hat in hand looking for a job with JP Morgan.
Yeah, no, I totally get that. So I know you're an advocate of self-directed investing. You teach people how to do it themselves. And I really just want you to speak on maybe a little bit on, say, if you were a young person, right? This could even be yourself at like 20 years old, right? If you're looking
Mm.
back and you want to give yourself some advice, like what do you think would be good to know going into the realm of being self-directed that you kind of wish you knew from the beginning?
Well, I think when you start makes a big difference. We all see the tables, and we can do the mathematics on compound interest. It is important to start young and saving, investing, because you get compound returns. But also, when I say when you start, I think we need to be cognizant of where the business cycle's at.
Mm,
And like right now, I mean, it's August 2016, and we're 86 months into the current economic expansion. There's only been 3 other expansions since 1850 that have lasted this long or longer. So if we were to go in and buy right now, like let's say we opened up an account
mm-hmm.
at Vanguard or TD Ameritrade, who knows? I'm not going to endorse any one company. But we open up an account and we choose to invest in the S&P 500 right now, maybe we're buying close to the top. Now, the argument can be made, it doesn't matter if you're going to be in this account for 60 years, 50 years, when you get in, because you're going to get the highs and the lows. But it can't hurt maybe waiting for a couple of years and see what happens. So I think people need to do a little bit of research and be aware of the business cycle and maybe wait for a recession. I've had good success in actually looking for, and Jake and I, we've talked about this a lot, but like inverted yield curves and then
Mm-hmm.
waiting for a recession and then investing, making my IRA contributions or making other types of taxable investments. So getting a little bit of education, waiting for the right moment. And I'm not a big believer in capital asset pricing models, efficient market theory, stuff like that. I feel like the information is asymmetrical. And I think definitely people are asymmetrical. People do not behave as models predict. And so I won't go into too much detail on that, but I feel like, yes, we can beat the market. I think the market can be timed a little bit, or else I wouldn't be here. If I didn't think I could beat them, I would join them, and I would just invest in the S&P 500 dollar cost average for the rest of my life and hope I have enough money for retirement.
That's
That's a little
awesome.
scary when you say it that way.
Yeah, it is. It is. It's very true, and a lot of people that's their model. That's what they depend on. Um, so so something that me and you talked about a lot when we were working together was this idea of you brought up the idea of beating the market, right? And a lot of people out there, they don't even believe that's possible. And yet I truly understand and how you can, but I just want from you to just say, like, if somebody is creating like a cash flow options business, right? They're trading options um strictly for cash flow. What is like a conservative number that somebody, after they learn how to do it, can produce on their account?
I think, and again, this is my personal opinion, but I have seen many instances where people are able to get a 2 to 3% return per month on a long-term basis. They average 2 to 3%. And so simple rate of return without any compounding, 20 to 30% returns a year would not be difficult. And people pull their hair out, so how is that possible? Well, it's possible because it's not passive investing. A lot of the statistics we're inundated with, like in university at the university, or from a classic investment advising standpoint, it's passive investing where we just set it and forget it. But if we opened up, and this is kind of important, trading is a business, and if
Mm-hmm.
we take the time and effort to really be involved, we should see a higher rate of return. Just like somebody that owns a 7-Eleven. If somebody owns a 7-Eleven, they don't expect just to make what the S&P 500 does. They expect to make a whole lot more. I have friends that own fast food chains. I'm not fast food, but convenience stores, and they're getting regularly 30 to 40% ROI per year. So in that business model, we think it's perfectly legitimate to say, oh yeah, he's getting a 30 to 40% return. But for some reason, in trading and investing, people don't believe it.
Mm-hmm.
So it kind of has me scratching my head and say, well, what's the difference? I mean, if I'm trading options or futures, stocks, whatever it might be, in a very systematic way, why can't I get a return similar to owning a 7-Eleven without the overhead? So that's kind of my argument. It's always worked, to kind of shut up the naysayers, because there will be a lot of those in your life. But it's worked well for me.
That's awesome. No, I totally agree with that. There are people who will, no matter how much proof or how much evidence you show them, they'll still never believe it. That's awesome. Um,
Yeah.
so this has been awesome. I love talking with you, Micah, and I feel like I could talk for days with you. But I just wanted to give you the opportunity to give some, I guess, final thoughts or anything that you have that you think would be helpful for those out there watching this.
Well, the again, I think for me this is a passion. I don't know if it's a passion for everybody, but for me it's a passion. That's helped me through some rough spots. I think we do learn more from the rougher times in life where we're tested. We go through times of adversity, and I remember the lessons I've learned during those times more than you don't really learn any lessons in the good times. It's just like you write it.
Mm.
And so I've had a couple of key moments in my life, more like 2008, 2010, where I had to take a step back and say, okay, what's important in life? From a trading standpoint, I'll never repeat that mistake again. And usually the mistake is this, is that hanging on to a bad position or a bad investment for too long,
Mm.
and then trying to make your money back on the same investment by doubling down, tripling down, quadrupling down, quintupling down. I've done it all, and it doesn't work. And because trading and investing is about making money, it's not about being right. And so that's kind of my parting thought, is that it's a systematic approach. There's no emotion really involved. It's done the right way. And sometimes you got it for the greater good. You got to take the loss today and walk away.
That's awesome. So also just for everybody out there, if you'd like to give the website of your newsletter service, I know it's awesome. You put some of your own trades out there. If people were interested in looking into that, how would they go about finding that?
Well, the website's pretty lame, but I've had a lot of subscribers over the years, so it must be good enough. And the website doesn't really tell too much, but let me just tell you about it. It's plentyoftrades.com. And at plentyoftrades.com, there's a link to sign up. I handle everything through PayPal. It's recurring billing, just through a credit card. And it's 3 trades a week, so 3 trade ideas a week. Yes, some of those I do place myself, some that I don't, though. My attorneys have said I have to say that. And we're not guaranteeing any success. It's an educational sort of thing, but the trades are live. And so and then once a week we have an update, where we kind of go through every pre-existing position and we say, okay, this is what's happening. This is what we expect to happen in the near term. This is what we should do about it. So I've been doing that for about 4 years now, coming up on 4 years here in a few months. And all in all, it's been a great experience. I've had some people stick with me the entire time. I usually get a few people to sign up every month, and I lose a few people. So,
Yeah.
so that's pretty much the newsletter, and it's kind of fun. It's not a big deal, but it kind of keeps me involved in a little bit higher level than I would be otherwise.
Yeah. No, I totally get that. Having a reason to really go into the marketplace and search for those ideas and create those for yourself
Yeah.
even. Yeah. That's awesome. All right.
Yeah,
Well,
thanks.
I really want to thank you for coming on here and talking to everybody in this group and kind of providing your insight into a lot of interesting topics that we covered today. So thank you so much, Micah, and I hope maybe in the future we could do this again.
Yeah, it'd be great. Thanks, Jake.
Awesome.